Hi, my name is Scott Pendleton. I'm with eMortgage, and I have 17 years of mortgage experience. I've been a mortgage banker for a long time. I consistently work with first-time home buyers, and they're constantly asking me questions about the mortgage process. When I have conversations with people, they don't always remember everything that I tell them, and I understand that. So what I thought I'd do is create this 3-video series so you can come back and look at this over and over again, and hopefully it helps you better understand what it's like to purchase a home and the process behind it on our end of the mortgage side. Now, this is really designed for first-time home buyers, but even if you haven't purchased a home in a long time and you're just not up to date on the new guidelines or what's going on with mortgages, this is for you as well. So let's start with what is the foundation of any good mortgage process for you as a home buyer, and that's the pre-approval. So the first thing I want to talk about is between a pre-qual and a pre-approval. When you're pre-qualified by a lender, and I pre-qualify people sometimes, you're basically telling me your income and asset information. You're not documenting anything, you're just telling me the information. I'm putting it into an application. You're either doing an application online or you're doing a phone application. To be honest with you, I prefer taking your initial application over the phone. That way I can ask you questions, learn more about you, learn more about your situation, and better understand your needs and wants. I'm happy to take your online application as well, but understand at some point we're going to need to have a conversation so I get a really good understanding of what you're looking for. So from that being said, when we do that pre-qual, you're telling me the information. When we do a pre-approval, you're actually documenting it. You're sending me pay stubs, you're sending me asset information, and I know that the information that you're giving me is correct. Where that comes into play and is more important is if you're self-employed or you make a lot of commission, or you're in an hourly job and we have to calculate overtime. I really would like to see that documentation to make sure that we're calculating things correctly so I can give you a good, solid pre-approval. Now, federal guidelines state that I cannot require you, nor can any lender require you to provide that documentation to get pre-qualified. I would say this, whether you're working with me or any other mortgage lender, I recommend you do provide that information, give it up willingly so that they can give you a great pre-approval. Now, the next step is we're going to run your loan through an automated underwriting system. Every lender in the country, for your standard conventional FHA, VA loans, we have to run your loan through either Fannie Mae or Freddie Mac's automated underwriting system. What that system does is it looks at your individual situation, your credit, your income, your assets, and it tells us whether you're approved or not. It calculates all your debt-to-income ratios, tells us, yes, this person's a great risk, they're good to go, or no. Maybe they've got a little bit of issues. Maybe they don't qualify for a $200,000 house. Maybe they only qualify for a $150,000 house. And we can kind of work those numbers and get that pre-approval through the automated system for you as well. So always better to get a pre-approval than a pre-qual. So now you've been pre-approved. Everything looks good. What's the next step? Well, really, the next step is going out and finding a home. We all know there's a lot of resources out there for you to do that. There's Zillow. There's Realtor.com. Personally, I recommend that you use a local realtor in your market. I can tell you this. Realtors get paid by the seller side. So if a realtor is representing you as a buyer, you're not paying them a commission. When they find you a house, the seller is paying the commission for both agents, the listing agent and the buyer's agent. Now, with that being said, there are going to be for sale by owners and things like that out there for you. And any good realtor will try to help you negotiate those deals as well. If you're not attached to a realtor, or if you don't know a realtor, I'd be happy to refer you to somebody I know. I know a lot of great realtors in the market, and I'm happy to share that information with you. So what happens after you find your realtor? You go out and you look at houses. You might look at 2 houses and find your dream home. You might look at 50 houses before you find your dream home. Once you sign that contract, or while you're going through that process, here's some things to do. Make sure you're saving as much money as you can. Make sure you're not using your credit too much if you can help it. This is a great time not to go buy a new car. Don't change jobs. Try to keep things as stable as you can. Save, save, save. Save as much money as you can. When you're purchasing a home, you've got a couple things to think about. You've got a down payment typically. You've got closing costs. We can talk about having the seller pay your closing costs and negotiate that contract possibly. And then the other thing you have to think about is once you buy that house, there's expenses. There's moving costs. If you're married, like me, I know every time we move or have moved in the past, you move into a new house. My wife wants all new furniture. We need new curtains. We need new everything. So there's a lot of expense that goes behind that purchase. So that's kind of the beginning stage. That's step one in the process. In the next video, video number 2, we're going to talk about what happens after you get into contract and we get your loan going in the process. So I hope that was helpful. I hope it was informative for you. Once again, my name is Scott Pendleton with eMortgage. Thanks very much and have a great day.